Centrally speaking, family wagwan, on do. Thanks for joining us for another program. I'm Anna.
And I'm Sheena. So, what is Centrally Speaking? Let me tell you. It's the program that opens up the conversation around important matters of economics and finance, matters of national importance that have an impact on your life.
So you know we do it for Centrally speaking, right? A mere information we give out over here. So hope you're ready for another informative episode.
On today's show, we will be talking with Dr. Wayne Robinson about inflation, and we will get a health check on Jamaica's economy.
All right, so who is Dr. Wayne Robinson? He's the Senior Deputy Governor at Bank of Jamaica, whose responsibilities include, among other areas, monetary policy and financial system stability.
But before we hear from Senior Deputy Governor Wayne Robinson, we want to hear from you first. It's time for Street Check.
How will you be managing your finances this Christmas season?
It's a struggle. I'm currently not managing. It's rough. Really and truly, I've told myself that I'm going to hold back on the spending, no whole heap of Christmas shopping this year, but we're still struggling.
I would say you have to have it to manage it.
You don't have it?
3 guesses. Or should I say 1?
Sir, that's a very interesting question because to be able to manage finances Christmas, you have to have money to manage it. And there is none, sir.
Because I don't know what the 2025 entails, so I think I will spend less, but I will definitely have a great Christmas this Christmas.
Most of my stuff them are due in Christmas season, like insurance and fitness and registration. So with this Christmas season, I was spending less. I'm prioritizing more on those stuff I mentioned earlier. So most of my like buying gifts and them stuff for it will be minimal this year.
I believe in controlling your funds, so you have to save a little. You get the Christmas bonus. So I think you should actually invest some of your Christmas bonus or put it down in a high yield saving. Maybe go abroad with that. I mean, save abroad, not travel.
Our guest, Dr. Wayne Robinson, will be speaking about one of our favorite topics here on Centrally Speaking. Guess what? Inflation, specifically our headline inflation numbers as discussed in Bank of Jamaica's last press briefing. Wayne, welcome back to Centrally Speaking.
Welcome.
Thank you very much. It's always a pleasure talking to you.
Always.
All right. So,
time.
Wayne, on the note of inflation, the Statistical Institute of Jamaica, as at October 2024, noted that inflation was 4.9%. And that is down from, I think, 5.7% in September. Firstly, what is headline inflation? That's the first question I have for you. And secondly, why is it now down to 4.9% from 5.7%?
When we talk about headline inflation,
Yeah.
we're talking about the overall consumer price inflation
Okay.
in Jamaica. And I stress overall consumer price because there's a broader measure of inflation that's calculated from the GDP deflator, but we won't go into that. So we just want to talk about the inflation that consumers face.
Okay.
That you and I face when we go to the store, we go to the pharmacy, wherever.
Yeah.
So headline inflation speaks to the overall consumer price inflation. Now, recall, Sheena, every month Statin goes across the country and they collect prices on a wide range of goods and services that we buy.
Yes.
And these goods and services make up what we call the consumer basket.
Yes, the basket. I remember the basket.
Exactly. And so then they aggregate all of these, they average all of these prices, and to get one figure that is computed in an index called the Consumer Price Index.
Right.
So the change in this Consumer Price Index, which is a reflection of the price movements in all the goods and services I mentioned, that is what we call headline inflation.
Okay.
Now, we often make a distinction as a central bank and as economists between headline inflation and core inflation.
Okay.
And the reason is, well, when you look at the broad basket, it contains goods such as the price of yams or the price of tomato. which is very volatile. You know, a little rain come and the price going through the roof. It also contains the prices of electricity, for example. So something happens way down in the Middle East and our electricity rates again go through the roof. So it contains the prices of goods and services that are quite volatile. And they will move because of things that are outside of Jamaica, that are outside of our control. So in analyzing inflation, we also try to abstract from the impact of all of this volatility so that we can get a better sense of what is the underlying inflation or what we call core inflation. So as you rightly said, headline inflation went down in October. And that was primarily due to the fact that coming off the impact of Beryl, which saw agricultural prices went up in August and September, we started to see a quick recovery in a number of those prices. And that is what really drove down the inflation in the month of October. So we saw where, for example, the price of pumpkin, that went down, the price of tomatoes, the price of sweet peppers, because farmers responded quickly, they started to plant back quickly, the crops came in, and so prices came down. So that's good. But that's headline inflation. Also, when you look at core inflation, core inflation was 4.5% as well. So even if we abstract from the impact of this Beryl, that has prices going up and coming down, underlying inflation is also at 4.5%.
Which is good. So speaking of headline and core inflation, so it was 4.9%, which is within the range viewers 4 to 6%. 4.9 is a good number.
It is a good number. It's an encouraging number.
It's encouraging.
It's a better number. Recall the government had set a target for inflation of 4 to 6%. So this is the annual rate of change in consumer prices. They want to keep it between 4 to 6% each month. And Bank of Jamaica, as a central bank, we are tasked with, as our primary mandate, to getting inflation in that 4 to 6% and keeping inflation in that range. So inflation printing at 4.9% is a good development for us because it's saying that inflation is coming back into our target range. Why has this happened? Well, for one, recall that what caused inflation to really go outside the target, to really accelerate, was the cost or the price of imported commodities. We have seen a sharp reversal in the prices of imported commodities. So things like wheat, and rice, and corn, and soybean, all of those have been coming down. Freight prices, shipping prices, that which actually spiked again earlier this year, since about June, that has started to come down as well. Fertilizer prices have also been trending downwards as well. So the price of stuff that we import have been falling. But that's not the be all and end all. That's not the full story. What's also a critical part of this outturn, a critical drive of this outturn, is the impact of our monetary policy actions. That we took. So you will notice that the exchange rate have been pretty stable. And so what that has done is that has helped to also dampen and reduce the cost of imported goods. And so that then filters through to the prices that we pay in the supermarket, for example. Our monetary policy actions have also been successful in tempering demand as well. So that has helped to also restrain the rate at which prices have been going up. Inflation expectations. I recall the last time we spoke a lot about just how important what people expect inflation to be.
I remember.
And based on our surveys, that is also coming down. Other cost factors such as wage increases, those have been moderating as well. So a number of the drivers supported by the monetary policy actions that we've been taking have led to the positive outcome that we've been seeing. But what does this mean really
Yeah,
for
can it be
the
maintained?
average Jamaican? What does this mean when we get our pay at the end of the week or fortnightly at the end of the month or when we go to the supermarket? Well, recall over the last couple of years, prices have been rising very rapidly.
Okay.
In fact, the inflation rate went as high as 11.8%.
Cent, right? I remember.
So we're talking about double-digit rate of increase, a double-digit inflation rate, something that, we thought was behind us. So with inflation now being at 4.9%,
Right.
what it is saying to us and what it means is that it's not that prices have stopped going up, but the pace at which they are going up is much lower than they were a year or so ago. And that's very good. Also, when we look ahead, we believe that inflation will be within this 4 to 6% range.
Nice.
So what it means is therefore you can expect price increases to be at around the same level that we are experiencing now.
No, okay.
Of course, this is barring any shock.
Right,
But the
yeah.
bottom
Plus
line
or
message
minus.
is that we can expect prices to continue to increase at around the same level.
Okay.
Which means that you certainly can better plan whether you are a householder or you're a business person.
All right, so Wayne, we're just coming out of the bad weather season, hurricane season, right? And we have had our hits.
Yeah.
So I wanted to share with us, you made some reference to tomato and so on, but tell us specifically, what are the likely implications coming out of that bad weather on the agricultural sector? And in particular, its implications for the inflation rate between the short to medium term.
Well, we had Beryl,
Yes.
and then we
And then
had
Raphael.
Yeah.
and we have been having a series
Bread and
of
groom.
Series.
yes of constant rain, which hasn't finished as
Yeah.
yet. So where we are now, we haven't, because of the continuous rain, we still have to be assessing what the impact will be on agriculture.
Agriculture.
Right.
Okay.
So we haven't fully incorporated that as yet, as we're getting in more information each month.
Okay.
But the bottom line is that the risk, that's why we say there is risk to our outlook. There's risk to the forecast. And this risk are on the upside. So what it means is that there is a greater tendency for inflation to be a little bit higher
Okay.
than what we are looking at because of these factors.
Okay.
And there are also some other factors. But we expect that the impact will probably be short term and there will be a strong recovery.
Right.
This is what we saw with the Beryl impact.
Right.
The government and the agricultural sector responded very quickly, and we expect that they'll continue to do so. So all being well, we expect that the impact of continued adverse weather will be short-lived. And certainly, whilst we think that there is certainly in the very short term over the next 3 months an upside risk,
Yes.
certainly if it should materialize, we are expecting to see some recovery certainly early next year. Again, barring any other shocks.
From the last press briefing, it was announced that BOJ reduced the policy rate by 25 basis points to 6.25, I believe, 6.25%. So why have to reduce a little? Why not just drop
lick
it?
one.
Yeah, I mean, why
Drop it.
why the little bit something that go on?
If you think about it, there's still a lot of uncertainty. We just talk about weather, for example. We really don't know what will happen or how it will pan out.
Right.
And as I said before, the risks are skewed to the upside.
To the upside.
So the bottom line is that we're still in an environment where there's still a lot of uncertainty. So when there's uncertainty, you have to play it very
safe.
cautiously.
Okay.
So that is why we've said and we've repeatedly said that we're taking a data-dependent approach.
Okay.
That is, in the context of the uncertainty that we're facing, we have to wait until we see what the data is telling us, how things are panning out. Then that will guide our action. So that is why we have taken this cautious and deliberate approach. Now, of course, if we start to see that inflation is falling through below 4% on a sustainable basis, of course, that will create the conditions for even faster reductions.
Right.
But we are not in that scenario
Okay.
yet.
All right, so in the Monetary Policy Committee, they decided to maintain relative stability in the foreign exchange market, right? And loosen monetary policy. Please, what does that mean for us normal Jamaicans?
What we've done, we've started to reduce our policy rate
Right.
from 7%, and we're down now to 6.25%.
Right.
Whilst we're doing that, what we wanted to communicate to the public and reinforce to the public is that whilst we're also reducing the policy rate, we're also going to remain very attentive to the exchange rate as well.
Oh.
Recall part of the reasons why it says we have been successful in lowering inflation is that because we have maintained relative stability in the exchange rate.
Okay.
And we will continue to do that. But I must emphasize that we're not trying to fix the exchange rate. We're not trying to target any particular rate of exchange. What we're trying to do is just manage the change in the exchange rate.
Gotcha.
Because what matters for inflation is how the exchange rate moves. Is it moving very fast? Is it moving too fast? Is it moving very erratic? That is what creates problems both in the market and for producers and consumers as well.
Okay.
So whilst we are cutting the policy rate, we're also going to be very attentive to ensure that the foreign exchange market remains well behaved. But let me go beyond that to see what does that mean? What does cutting the policy rate actually means? So when we reduce our policy rate, first of all, we expect that the banks will follow, adjusting their rates,
Right.
adjusting the rates that they charge on loans,
Okay.
whether it be mortgages, your
Or
credit
loans.
card, or loans to businesses.
Right.
We also expect as well that deposit rates would adjust, even though deposit rates, some deposit rates are very low, very minuscule.
Yeah.
But certainly there would be some adjustments, for example, in your time deposit rates as well.
Fixed deposits.
Fixed deposit rates, exactly. Bond market and money market rates will also adjust. So the government's treasury bill rate, we expect to also adjust downwards. But the thing to bear in mind, particularly on the banking side, this will probably take some time for us to start seeing it.
Transmission.
Yeah.
It is because of the frictions that we see in this process by which our policy rate impacts the banks. We have been talking about this for some time. This is what we call the monetary transmission process, and we're saying that this transmission process is not as efficient as we'd like it. So that is why we are focusing and thinking about what are some of the things that we can do to make this transmission process more efficient. One of the problems is the lack of competition within the banking system. So one of the things we're doing is to look at measures that can facilitate that. So for example, you may want to move, because you're not satisfied with the rate that you're getting at a bank, you may want to move to another bank.
Yes.
So we are looking at ways that we can facilitate that. And one of the ways that we're doing that is we are looking at developing what is called a central electronic know your customer facility.
Okay.
Which will allow banks to more quickly and efficiently assess
Clients.
their clients, which would then speed up the onboarding process and
Business.
facilitate.
Yes.
So these are some of the things we are looking at.
All right, fair enough. Thank you, Wayne. We have some more questions for Dr. Wayne Robinson at Bank of Jamaica, but we pause for now. Stay with us. More Centrally Speaking right after this break.
Welcome back to Centrally Speaking, where we continue our conversation with Dr. Wayne Robinson, Senior Deputy Governor of Bank of Jamaica. So Dr. Wayne, we're going back to the Dr. Wayne now. We are coming to the end of 2024, and we want to check on our little patient. Tell us, what is the health check looking like for Jamaica?
Because we're a small, open economy, one of the first vital signs we look at is the health of our external accounts. That is
Okay.
the balance of payments, in particular the current account of the balance of payments, which tracks all the inflows and outflows of foreign exchange into the country that are due to one, trade in goods.
Yes.
That is when we export and import goods. Also, trades in services or exports and imports of services, such as tourism. Also, inflows and outflows that comes from remittance.
Yeah.
And also, you know, when we earn abroad, so when a farm worker goes abroad and they earn abroad, that is also captured.
Yes.
When you invest abroad, Sheena, and you get your dividend or
Why you
whatever,
pick for me?
or whatever little interest income you get, that is also captured. And when we take a balance of all of these flows, when we
Yes.
balance them out, what we find is that the current account is recording a surplus.
Yes.
Fiscal year 23-24, the current account recorded a surplus of 3.1% to GDP.
That's not bad.
The fiscal year before that, it recorded a surplus of 1.9% to GDP.
Then you nearly double.
Based on our estimates and our forecast for this fiscal year, which is going to end in March 2025, we're expecting the surplus is going to be smaller, probably between 1 to 1.5% of GDP. So what that means is that for 3 consecutive years,
Yes.
we'll have recorded a surplus on the current account.
We healthy man.
So that is a very encouraging sign. Of course, the devil is in the details,
Yes.
but I won't go into that.
No.
But what I say on the headline,
The headline.
Macro.
the macro headline, that is encouraging.
All right, so Wayne, you know we're approaching Christmas, right?
So I'm going to get my sorrel and my
Your Christmas cake. Yes, absolutely.
Yeah, man.
So when I'm going to get it?
You're gonna get it in exchange for some information.
Okay, boy, you're sticking me.
Yeah,
All
man.
right.
All right.
So stable and predictable.
So, very predictable. So, for our viewers, what sage message would you like to leave with our viewers ahead of Christmas?
First of all, make sure you write up a little budget. And in writing up that budget, the second thing is make sure you put a little aside for January month,
Month, you call it?
January month, and the rainy day.
The quarter of
period.
January. January quarter.
January period.
Yes. And put a little aside for the rainy day.
Yes.
And finally, I wish everyone a peaceful, and joyous Christmas. And remember the reason
For
for
the
the
season.
season.
Yeah.
Well, Wayne, what we can say is that you and the team at Bank of Jamaica are doing all you can to ensure that the foundations are set that we can enjoy our Christmas this year and beyond.
You're
right?
doing an
To
excellent job.
use your term for
She's
the
modest.
next 8 quarters.
Thank you very much,
Yes.
Sheena. And we couldn't do it. It was a team.
Yes.
Over 700 of us at the Bank
Yes.
of Jamaica. And also our colleagues at the other economic agencies, the
Yes.
Ministry of Finance, the Planning Institute, all hardworking.
Yeah.
And
We're not
we
going with
look
it ourselves.
forward to next year.
Okay.
Now going within the self, pass the vibe check.
We have been speaking with Dr. Wayne Robinson, Senior Deputy Governor of Bank of Jamaica, about a myriad of things, to include inflation. Centrally speaking, we'll be back after this break.
Welcome back to Centrally Speaking. Here are the key points from our guest, Senior Deputy Governor Wayne Robinson. In other words, it's time for the fast facts. Number 1. Headline inflation for October 2024 was 4.9%, reduced from 5.7% recorded in September 2024. That's good news. Number 2, headline inflation means the raw inflation figures reported in relation to the Consumer Price Index that we call the CPI. Number 3, the Consumer Price Index is the average of all prices of goods and services monitored by the Statistical Institute of Jamaica. You know them as Statin. Number 4, core inflation was 4.5% as at October 2024, and this is inflation minus the figures for food and energy, which are considered volatile. And number 5, Bank of Jamaica expects the country's debt to fall below 70% of GDP by end of the fiscal year, March 2025. And that's our program for this week. This has been the Fast Facts. You can't believe it? That's the show for this week.
Follow us on X and Facebook at Central Bank JA, at Central Bank Jamaica on Instagram, and on BOJ's YouTube channel. You can also visit our website at boj.org.jm.
And as usual, we invite you to send your questions on X or Facebook.
And of course, watch Centrally Speaking next week at the same time right here on your station, when we will have another special guest. Thanks for watching. I'm Sheena.
And I'm Anna.
See you next time.
Bye.
Centrally Speaking is a production of Bank of Jamaica.